about to start the panel for DeFi, the DeFi panel. DeFi, banking, innovation in banking, payments. And to start, since the beginning of time with blockchain, right? More people have seen blockchain as a financial tool, right? A tool to kind of change innovation in the financial ecosystem. Okay, here comes Krystal. And in this panel, we have very interesting people from the banking perspective, from the banking side, and then also from the blockchain side. And then I think some of you also have been in both sides, right? So we will start with having you introduce yourself. I'll talk about like your current roles and maybe your past experiences as it relates to DeFi, innovation in banking and payments. Who wants to go first?
I can go ahead and kick it off, Gideon. Thank you.
Yeah, let's go.
Yeah, and I feel honored too to also be on this panel with everybody else. And everybody, welcome to the Babylon Project and World Blockchain Hackathon. So first and foremost, my name is Krystal Gracier. I'm an investment banker with Morgan Stanley's technology team out here in Menlo Park, right in the heart of Silicon Valley. I've been specializing in technology companies now for the last 5 years, straight out of undergrad. And I've also, though, been in the financial services industry for the last 10 years. So I started out in retail banking, worked through consumer, commercial, corporate, and investment banking, so the full stack. So I've really had experience in seeing everything from the payments process, just in general from a personal perspective, as well as from a business and large enterprise perspective, and been at the forefront of capital markets issuances. So what I do in my day-to-day role currently, I work on initial public offerings. Some of the most recent transactions I've been a part of are, the Snowflake IPO that launched in September, as well as Palantir's IPO, just to name the most recent two. And in terms of, decentralized finance, that's really where it comes in from my perspective, is that, this is going to be changing the financial services industry as a whole. And so my interest and passion for understanding this new technology and following it really lies with understanding just the nature of how it's going to disrupt the financial services market as a whole. And so thank you guys all again for having me.
Thank you, Krystal. Next, please.
Hello, this is Yonathan Lapchik, CEO of Suku. We are a blockchain technology company out of Silicon Valley. I'm calling you from Miami, another office that we have. We've been focusing on traceability as a way to do two things. The first one is to enable and help brands and retailers to build more transparent products that will lead into connecting with the market of cautious consumers to increase sales. And through that, traceability is that we are giving access to the smallest participants, the ones that have the least value on the chain, to give them access to DeFi as a way to enable and incentivizing them to give us the inputs that will create the story that will create the traceability and will allow brands to connect with the conscious consumer. I'm an engineer, originally from Uruguay, a small country between Argentina and Brazil. Spent my entire career in digital transformation, and then came to the US to do my MBA when I learned about blockchain and Bitcoin for the first time in 2012 through one of our professors at Duke. And then I got obsessed with it. I needed to do something with the obsession. And after the MBA, I joined the Deloitte Blockchain Lab in New York. I've been the product leader for 4 years, where we've been working on different solutions for financial service supply chain, going from education at the beginning, where the blockchain world didn't even exist, to implementing solutions for them. And then in 2017, many of us left the lab to join Suku, which was a client of Deloitte at that time. Thank you so much for the opportunity. Exciting to be here.
Thank you, Jonathan. We're excited that you're part of us, Suku, with all the DeFi products that you're building. So we just listened to your co-founder, Lucas. Yeah, team, please.
Yep. Hi. Thanks again for having me today. So I'm calling in from Asia today. So glad to be a part of this panel. So I first got involved in fintech, blockchain in 2014. Done a lot of early things in the space. Was part of the founding team at Wirex, which is now has about 3.5 million clients. It's a kind of a digital bank and crypto card company. Started a consulting firm. I worked with great companies like Paxful and helped accelerate them. Did a lot of work in the ICO space, kind of in that kind of a 2017 run before I got really back into kind of the fintech. Got involved and helped take a global digital bank to market with Eki Bank, and really wanted to get back into the fintech scene, more the retail focus. And then that's when I came really back into the blockchain. Started looking into DeFi, obviously, when it started to kind of peak up on everyone's radar about 6 months ago, and realized that there's no, while I guess the technology is so powerful and what it could be, but realized there's no really user interface to this whole kind of ecosystem. So started to put together a team and the idea of how we could actually build a kind of a fintech that could offer this new powerful kind of financial products to a kind of a greater audience. So founded Yield App, and we're kind of getting ready to take this to market in the next month or two. Right now it's kind of under development. So Yield App is essentially we're building a regulated fintech to be able to offer DeFi products to our user and to different clientele throughout the world, to kind of offer them higher yields, kind of focus on kind of underprivileged kind of market segments that, well, maybe don't have the best national currencies, that actually want access to kind of a more higher yielding products and kind of safe havens through kind of stable coins. And, so yeah, I'm excited to be part of this panel today. Thank you.
Thanks, team. Great to meet you, Tim. First, team, is in Asia. I got to know team through a network of my advisors and in Europe, and so it's really great that you're here to share your interest with the community. The next person, please, Bruce.
Hi, everyone. My name is Bruce Pawn. I am a founder in the blockchain space for 7 years. We've done 3 projects, one called Ascribe.io, Big Chain DB, and now Ocean Protocol. Before that, I had founded a company called Avantalion, where I helped to build about 20 banks around the world for companies like Mercedes, Volkswagen, Mitsubishi, and Jaguar Land Rover. In the 7 years that I've worked in blockchain, the common thread that has gone through all of our work has been to give people back control of their intellectual property and data. Starting with Ascribe in 2013, where we were putting essentially NFTs on the Bitcoin blockchain. And now it has taken us to Ocean Protocol, where it is the intersection of AI data and blockchains, where we are essentially using the tools of DeFi and blockchain and crypto to allow people to both take control of their data and monetize it.
Thank you, Bruce. We're happy that you joined us in this panel. Very interesting thing about this panel is that we have people who are in blockchain, who've been in blockchain and crypto for a very long time. So we call them the crypto OGs. And then we have Krystal, who is also coming from the traditional banking. And then I really think, that DeFi is going to change the world, as everyone keeps saying it. I agree with that too. I would want to know, why do you think DeFi is important, right? And why is it really a game changer why is it really a game changer, especially within the next 5 years? Anyone can jump in and talk about it.
I can kick it off. Oh, go ahead, Bruce.
Sorry. Please, go ahead, Krystal.
Yeah, no, I mean, in terms of decentralized finance, look, there was something that was recently posted about Citigroup, who made an improper payment of about $900 million when the size of the transaction was supposed to actually be much smaller. And, decentralized finance, right, and these smart contracts are really meant to help, manage the accuracy as well as solidify, any sort of transaction that goes through to try and mitigate these mistakes that can be just naturally made from, a financial institution, a centralized financial institution. And these mistakes cause and create huge fines, a lot of headache, bad press, and generally it's all caused and created by human error. And so from my understanding, at least, and, I'd love to hear from the rest of the panel on this, is that, decentralized finance is meant to try and help manage, and eliminate some of these inaccuracies that are created.
From my side, sorry. From my side, I when I look at DeFi, I look at it from the perspective of the last 7 years in blockchain, as well as the work before that. In that, there have been books that have talked a lot about value and how are people able to get value out of their assets. And typically, it's been machines, it's been factories, it's been houses, and for the vast majority of humanity, that has unfortunately not been accessible. And because that hasn't been accessible, you haven't been able to apply the tools of finance for people to get loans, build businesses, and do what they need to do for their families and their communities. And where DeFi comes into play is at kind of the intersection of financialization and the internet. The internet wasn't built with an ownership layer, which is why today IP is stolen. Intellectual property isn't really valued or copyrights aren't enforced. And where DeFi comes into play and what we're doing at Ocean Protocol particularly is we allow people to monetize data. And if you look at the macro picture, this means that people are able to monetize something that traditionally has not been monetizable. It's not been considered an asset. And we're going to be seeing this a lot more in the future with digital NFTs, your own, all the stuff that we're seeing now with the lending, collateralization, et cetera, of crypto itself to get high yield. This is really exciting because it's showing us how digital first, digital native type assets actually do have value. And what DeFi does is it allows the tools of traditional finance to be applied across an infinite number of asset classes where people may find value. And so that's what makes me very hopeful about this current DeFi craze.
Those are great points, Bruce. And then to add to that, I would say that when I don't think the DeFi concept is new. I think it's the same concept that we had 10 years ago when we first heard about Bitcoin. Now we decided to put a name on it because it seems like we are closer. So if we look at the first message when you heard about Bitcoin, it was bank the unbanked or become your own bank. So, okay, how do I become my own bank? I own Bitcoin. I put it on my ledger and I store it on my closet. I don't need to pay anyone. I don't need to pay a bank. That's my savings account. Perfect. But if in order to become your own bank, a savings account or a change account is not the only service you need to provide. You need to provide a way to offer lending services or other type of services. And that's where we found smart contracts that now would enable me storing Bitcoin or Ether on my wallet to give a loan to someone else. And now that we're closer, we decided to put a name on it. And I think that's why it's important because the how we started with the message, removing the intermediaries, removing the parties that are not adding the value that we think they need to have, and distributing that value to the community. I think that's a powerful move, and we are really getting close to that.
Team, you want to add something?
I think people touch on a lot of great things, and I agree. I don't think there's anything really new. I mean, DeFi is obviously more the word of the day, but I think it's been a natural progression. What I think got a lot of people excited, at least would myself get excited, just the peer-to-peer nature of what blockchain-based currencies is able to bring. That has continued to evolve, and obviously everything that's building on Ethereum and other blockchains. There's a lot of just traditional finance. So that's the borderless payments, now there's the borrowing, the lending aspect. Everything is happening through some smart contracts. Insurance. I mean, there's all of our traditional financial instruments that are now kind of being, completely digitized and automated, and without the central middleman. So it's becoming quite efficient 24/7. And I think it's just a light bulb. I think it's very much a light bulb scenario right now, where just more and more people's minds have kind of clicked on where this is actually going, and like what's actually here to stay. So.
Yeah. Thank you, team. From everything you've all said, it's pretty obvious and exciting that we all know that DeFi, it's here to stay, right? And then talking about the underprivileged and then the underbanked, right? This is something that we've heard again several times, especially in 2017, 2015, 2016, and 18, during the ICO period when people raised a lot of money. And this essentially also became one of the reasons why I decided to start this Babylon project, right? Because, again, what happened here was that I saw a lot of people go raise a lot of money saying they're building things for the unbanked, right? Or the underbanked or the unbanked. And, again, most of them didn't build tools that could work. That is one. Two is that most of them just raised money and disappeared, right? And now we started having problems, especially in the blockchain or crypto community, with, hey, this is a scam or this is shitty. And then it became like a real problem for the community. And I think this really happened because people did not really engage the underbanked, the underprivileged, the people in the countries that are trying to build these applications for, right? And again, I can say for sure that the developing countries will likely maybe be the first countries to adapt this technology, and then start using more often DeFi and blockchain, right? And I think that with this community, involving people from different parts of the world can actually really help us design the design products, right, that these people can actually use. Because again, if people who don't have any communication with other people build such products, right, it might end up changing things and making things go in a very bad way. So my next question is really going to be how do you see the future of DeFi, and what do you think should be the next tools that people should build to essentially make users use it? How should DeFi products be built, or how should it be structured so that people will be able to use it? For the mass market, no more for the netty guys, for the mass market.
I can start. I think we went through the exploration phase, where it's totally okay to fail. It's totally okay to come up with crazy ideas. You'll see someone adding ETH to get DAI, and then DAI to get ETH, and then ETH to get DAI and something else. And that's totally okay, and you probably make like 200% this month. That's great for innovation. That's not sustainable, right? And now I think we are still playing at the protocol layer. What we saw at Suku, and I'm gonna push a legal disclaimer just in case I say something around Suku, but Suku is not intended for U.S. persons. What we saw is that this exploratory phase for DeFi is good. It's not sustainable, but I think it's going to open up a lot of different opportunities for people and projects that are trying to bridge the gap between our world, our bubble, and the real people, the real participants that need DeFi. And I'm not talking about the ones that have banking access and want to get a 5% instead of a 2% return. I'm talking about the people that really don't have an ID, or they don't have banking access. In our case, that's been our focus for a couple of years, where we found a way, because we play in the traceability space. If you look at a coffee brand, or you look at any brand, they will probably have a network of small participants at the end of the chain. The farmers, the coffee participants, and apparently those are the people that really need it. Those are the ones that don't have a lot of access, don't have IDs, and those are the people that need it the most. And because we have a connection with them, then we create this bridge where, for example, and Lucas went through that on our presentation, with one text message, they provide us input for traceability. We build the story that allows brands to sell more and connect better with conscious consumer. We give them tokens. In exchange of those rewards, they can send one message and they get a $10 loan. Like that message hits our API, that API hits 4 different transactions on Compound or any other DeFi protocol, and somehow they get a loan. So I think the winners are going to be the ones that actually find a way to bring DeFi and make it simple for people to use.
Awesome. Anybody want to add something? Well, anyone, especially Krystal? Well, what do you think about like what do you think about DeFi, right? I mean, how do you think it should be designed, especially in relation to traditional finance, right? What application do you think that DeFi should focus on first in order to kind of attract institutional money and then attract banks to actually really adopt this technology?
Well, so I think there's a couple things, right? So something that people have touched on, right, is like being able to bring this to the masses. Because right now it's really just the people who can nerd out and really understand and dive in and are interested in understanding the technology to be able to actually use it. And right now the general public just has either a distrust in the technology itself or it's above their head, and so they're not willing to adopt it themselves. So, to Yonathan's point, if really the people who are able to hack, for one, like the user experience to kind of bring, blockchain, crypto, DeFi in such a way that is very simple for any user to adopt right out the gate, that would be a huge win, and that would drive user growth. And as you drive user growth and you drive this demand, which there's already significant demand, like, look, there's already over, I think it's like 11 billion in assets right now in the ecosystem. And that's huge. That's a massive market. And so it's already drawn a lot of attention from financial institutions, but the general public has still yet to get comfortable around this. And again, it's really because it's new. It's a new technology, and it's not the easiest to understand out the gate. And also all of the platforms currently are more geared and tailored towards people who already understand, or who have been around in the market and have been following it for quite some time. You have seen people, obviously, who jumped in onto the Bitcoin and Ethereum craze a couple years back and rode that wave all the way up until it crashed back down. And that's also kind of spooked the market. It spooked, just your general consumer. So I think that it's going to take some time for more people to adopt DeFi. Is it going to change the way we view finance? It already has. That's a fact. Something that I found very comical was Jamie Dimon, the CEO of JP Morgan, coming out and saying, anyone who's looking at blockchain, I don't want them here at my firm. And then he backpedaled. I think it was like maybe a week later, and come to find out they launched their own blockchain team to investigate. And I believe there's, I don't know exactly the full extent of it, but I know that they are investing heavily, and all the financial institutions are trying their best to understand blockchain and decentralized finance and how it could potentially either uproot them, or can they support this ecosystem in terms of its development. You asked a question, though, as well, what do I think people should focus on? I love this concept of lending. I have a lending background myself, and I do believe that credit is how the economy runs. It's how the economy functions, and this is really how you grow and establish wealth for really anybody. And so from a lending perspective, the natural financial institutions, there's natural biases that are already in place. And we've seen it across the board where, for example, people who have applied for mortgages, if you live in a certain location, right, you may not qualify for that mortgage based on the location of, the area, the zip code that you have. But with blockchain and DeFi, that anonymity removes that natural biasness, right? And so that essentially allows credit to be accessible to more people, and the more people that we're able to get to be able to lend to, the better that we're able to actually improve the current inequities, the current income inequality, just as a whole, and allow people to access the markets, more naturally versus having to go through all of the various hoops and hurdles that they currently face with, just general financial institutions, a centralized bank. So.
Yeah, true. I mean, what the good thing here about blockchain is that I think it's removing lots of bottlenecks in transactions, right? Where you have to do lots of verifications, which are totally unnecessary. The other day I was reading this news that this bank had a few $1 billion loss, right? I'm like, a bank is losing billions of dollars. That doesn't even make sense, right? It goes down to saying that, well, of course it happened with the fact that coronavirus happened and then all the physical locations are pretty much empty. And then, that's all part of it. But, we think that the banks of the future, which again should be powered by DeFi, should not have any physical location, right?
Right.
Bruce and the team, you want to add something? Okay.
Gideon, I want to add something to that, though, really quick. There is a big risk, though, still with lending, even in the crypto market, even through DeFi. And that's being able to understand the risk of who you're lending to. And that's a big challenge. If someone can hack that challenge, that'll be huge in terms of opening up the market. Because right now, with lending, generally, it has to be collateralized within the crypto space. And that almost defeats the purpose of lending as a whole, where, lending in terms of like a money multiplier effect, it needs to be unsecured. In order for it to be unsecured, you have to be able to risk rate whoever it is that you're lending to. And that's yet to be hacked in terms of, the DeFi market. And if someone is able to figure that out, that will open up this ecosystem to, when you're talking about poverty and people in, economies that don't have access to credit or lending, this would help open up that door for them.
Thank you. From the perspective that for DeFi and where we're at and such, I think that we are in the late 90s, like the internet was. And if we look right now only now you're getting companies like Shopify going public. You're getting companies like Zoom. Only now is that becoming mass adoption where anybody can set up their own storefront. Anybody can hook up, set up a video conference, etc. Anybody can order a taxi online. So we're talking about a 2-decade span before DeFi, honestly, hits the masses. Right now, as Krystal was saying, we're all nerding out right now. We just figured out inflation and monetary issuance and all this sort of stuff in the early 2010s. Now we're learning about all of the financial products. Most of us didn't know a lot about how the financial system works. Now we're learning new things like Herberger tax and Cantillon effect and all these different phrases. We are still in the nerd out phase, if we're completely honest. So looking forward to see how DeFi has some sort of path forward. It's going to be weirder than we expect. That's probably what I can say. But many of the ideas that we're trying now, they're going to be janky. They're going to be clunky. People aren't going to like them. You're going to have to click 9 times confirm on MetaMask. It's not going to be comfortable. But these ideas right now, we need to have a kind of a store of them because we know that in 5, 10, or 15 years, once we figured out the UX, we've filled out the infrastructure, we have some base tools and applications, they will definitely change finance. And I think DeFi is our first kind of cut at this. And I'm really excited because all of us are in a field where if we stay innovative, we stay open, and we keep learning about what probably the stuff Krystal has been doing for much of her career, we'll be able to mirror that into the DeFi space. And that's going to be really exciting because the more people who actually understand the financial system, who come from outside the financial system, the more inclusive we can be.
Yeah, 100%.
I think the only thing I'd add on top of everyone is just the scalability. It's always been the issue with Ethereum. It still is the issue. And if this is going to be really something that can be pushed out to a mass market, I mean, it has to be able to scale. You have to put transaction, fees have to get to a reasonable point. I mean, the entire original vision, right, was, at least I think, what I remember with Bitcoin, at least back in the day, it was basically sending money for free everywhere, anytime, right? And it was a magical network, and it's everything but that. now, and it's like DeFi it's for the privileged at the moment. So I mean, I think you can't really bring more people into the ecosystem until like some of these the basic legacy issues are starting to be kind of resolved. But obviously, I understand that the UX, the wallets. I mean, this is again, I think everyone's touched on it. It's anything but, I guess, user friendly at the current present. So,
my thoughts around that, Tim, and I agree. It's currently an issue. Scalability, performance is a clear issue. I think when we went back to what happened with Bitcoin, when they were discussing about increasing the block size and all, I think what we learned is that we need to be patient. That things take time to grow and to scale. If we were to download a CD-ROM in the 90s, it would take us hours and hours, and now it takes us seconds. So I think people see the value, we see the opportunity, and we wanted to get it done now. But I think it's just a matter of time. I wouldn't be concerned about scalability too much. It's just gonna come with the time.
Yeah, it's definitely true, right? I'm going back to what both of you said in terms of time. We look at Moore's law, and then we know that things are kind of moving very fast. From my own personal prediction, I would say that within 5 years, the DeFi space should literally be a lot bigger, should be much more encompassing, especially to the people to the unbanked and to everybody, right? And then I have this interesting question or idea about how can we really apply also DeFi core principles in normal things, right? Like standard way of life, let's say, in anything you're doing, right? In any business, right? Or in any industry, not just only in banks, not just only in lending, right? I mean, the core principle of DeFi, how do you think we can apply that in other areas? Or how can we integrate the core principles of DeFi with other industries? Yeah. I will start by giving an idea, right? Where I will give an idea by saying that there are people who basically I think all of us, most of us pay rents, right? We pay rent in different places where we live, right? And so when you pay your rent, you literally get nothing back for it. So it's the other way. Currently, one of the DeFi principles that we have now is literally collateralized lending, right? Which Krystal just talked about. Lending again still remains one of the biggest things we need to break into. But however, let's look into a scenario where you are actually you're paying rent for your house. Well, the rent you're paying could actually go as part of a collateral, right? Is there a possibility to design systems like this?
Definitely, yes. I think it will take us more than this conversation to figure it out. But I think I'm excited about things like using, and I know you, Krystal, touched on the collateral issue, which I think it is an issue. But connected to your thought, we could potentially use whatever for collateral. Why don't I use just my computer or the table I have at home? Like finding a way to discover assets that we own to unlock value. And I think that's similar to the concept of renting. If someone's using my rent to go and find and invest in somewhere else, why don't you share the interest with me? And I think it's a similar concept. So both things are gonna come, but I think it's gonna take a lot of time until we figure this process out.
Yeah, I think, from a collateral perspective, actually having, an asset such as a home or an apartment, that is a lot more feasible than, say, your computer or your desk. Because say this hypothetically, Yonathan, you're lending me $100 and I'm putting my laptop as collateral. I don't pay you the $100. How are you going to collect my laptop?
You can actually create an NFT that assigns you ownership of the laptop. And whenever you try to sell your computer, someone will check if you own the laptop. And if you don't own it because you own the NFT, because the smart contract switched them, then you cannot sell the laptop.
So there is a way, but the likelihood of that actually happening is challenging because who are you going to have? Yeah, like who are you going to have actually come to the house? To my house to come collect my my laptop. And you see this even in like the auto industry space. Like just
I will come. I will be there. I will come.
Gideon's gonna come steal my laptop. Okay, I won't let you in.
Yeah.
But in the auto industry space, for example, right? If someone defaults on their auto loan, you do have someone try to collect the vehicle, but at the same time, someone could just get in the vehicle and drive off, and so you have this collection agent, essentially chasing around this person trying to collect the vehicle. And yeah, you can't sell it because of the ban; it's traceable, et cetera, et cetera. But granted, these auto industries, these auto lenders, they have the resources and the capital to pay people to go hunt for that collateral, right? If people are defaulting. Me as a lender, if I'm going to the DeFi space and I want to do peer-to-peer lending, there's a thin likelihood, I would say this is obviously subjective, just when I'm coming off of the top of my head, that I would want to lend to somebody with them collateralizing their desk, right? And then if that is the case, then it's going to drive up the interest rate because the risk of me lending to you is going to be so high that in order for me to actually feel comfortable lending to you, I'm going to have to charge you a lot of money for it. And so that's really where this whole unsecured piece comes in, and having like some sort of risk rating comes into play because it benefits both the lender and the borrower. Sorry, Yonathan.
No, it was a brainstorm.
Yeah, I loved it though, and the fact that you just said that like off the cuff, you're very convincing. That's for sure.
Thank you.
Okay, thank you. Let's talk a little bit about yield farming and then liquidity pools, right? And then the risk of DeFi, because are we really going to get into a scenario where this kind of problems that we had earlier in the past of crypto history will happen again in DeFi? Is that possible? And how can we avoid that?
Well, I think we're already having the same problems that have always persisted in the crypto. So I think there's a whole host of problems that are kind of already kind of here. I think any time that there's since money up for grabs, there's going to be malicious actors that are going to be kind of stepping forward. But I think people have this natural sense for greed. So as long as that is a kind of a human nature, of course, it's always going to put people as a target. So good governance. I think good governance overall in the space, and just requiring for contracts to be audited, and just not, just people not allowing or just not encouraging people to go into kind of anonymous pools that are popping up on a daily basis. But for the most part, I think if there's people willing to put money into anonymous pools, I don't see how you're going to possibly just mitigate that completely.
I really liked how you touched on that, Tim, especially like the greed component, because with decentralized finance, right, I think that everyone has really good intentions of trying to revolutionize, just the financial services space as a whole and bring it to the masses. But what people need to be extremely careful about is actually making the exact same mistakes that, a centralized financial institute or, centralized, currency platform has already gone through historically, right? Where you see the economic recession in 2008 because of people getting mortgages without income verification, right? And then the banks then creating these credit default swaps on top of those mortgages, and that created a big, massive bubble that rippled across the entire world. And then, you have a number of other, this is just within our lifetime, right? But there's another of other different examples and stuff historically that I think that everybody can learn from as they go into DeFi. But when you talk about greed, I think people sometimes get blinded by the greed and they completely forget about, just the issues that have challenged our current financial system that everyone is under. And so auditing, governance, all of that, and also too having a community of people too who have the best intentions for the community as a whole is extremely important to the success of this platform, especially on the premise of how quickly it can reach the masses. Because if there are too many bumps in the road, if there are too many, these anonymous pools, capital being hacked, people coming out and stealing crypto left and right, that's going to only push back DeFi hitting the masses, even further. So it's really important.
Yeah, I agree with you on that, especially people losing their money, especially those who most people can't even handle their money, keep it safe. That's why they go to the bank. And so if people have to keep their smart contracts, many people are going to lose their money and they're going to be angry. And they're going to be angry at nobody. Because again, it's anonymous, right? I think having a kind of pseudo anonymous platform, or not 100% decentralized, right, could be a great way to actually bridge this gap initially, right? Because I don't think we can jump from 0 to 100 immediately, but then we can go 0 to 1 or maybe 0 to 10, right? And then before going to the next place. To round off this panel, right, it would be great to have your insights, right, on where you think we're going in the future, and then how your companies or the jobs you're doing now or the things you plan to do in the future can help help us get to the next place we want to get to in the DeFi sector, right? And the reason why this is important is that, over time, the Babylon community, again, with the developers in the community, will keep going out and focusing on this, especially this area, right? Coming in from our next hackathon next year, and then involvement from certain banks that are already interested in being part of our next hackathon. So we will have lots of innovation departments of banks who are already interested. And then also we would want to know how your companies can actually help bridge this gap, right? I might start by saying that I'm a huge fan of incentives, right? I think that creating great, awesome incentives for normal users, first of all, making platforms easy to use, so as easy as Instagram, and then creating incentives for users, right? It's actually a great way to kind of help power these tools and help have people use them. So you don't have to explain too much how it works. The floor is open.
I will highlight 3 things. The first one is connected to what you said around incentives, which the key there is to create sustainable incentives that will create a long-term relationship between the protocol or the application and the platform and the users. I think that's key, and we are focusing on that. The second one, I think the industry needs some consolidation at either the protocol layer or at the app layer. I think right now it's great because we're just exploring and playing with all these tools. But at some point, like we have right now multiple money markets, we have different protocols that are probably doing something similar. And I think YFI did a great job by connecting them all together and say, hey, just put money here, and I'll take you through where you're gonna get the best return. So those things like creating the kayaks for these protocols will be something good that will ease the transition to the real user. And I think the third one, which we also focusing a lot, is simplicity, like making things simple, trying to translate the value from this bubble to the real world.
Thank you, Yonathan. Bruce,
sure, I can jump in.
Yeah.
I think all the tools that are being built for DeFi, where we are using the knowledge from traditional finance to apply towards crypto assets, can be applied to any other digital asset, whether they're NFTs, artwork, this type of thing, intellectual property, or data. And that is the reason for being for Ocean Protocol, is to get data into a position where we can use the tools of the DeFi space so that it can be shared and financialized. Lending, collateral, yield farming, staking, all of the tools of DeFi can be put onto data. And my fervent hope is that in 5 years, we have a flowering community around data, and data has become an asset class, just like Bitcoin is now for more and more Fortune 500 companies considered potentially an asset class where they can put their treasury into as a hedge against central banks doing bad things. I believe that data has the most promise because of all the things that we as humans have, all 7.5+ billion of us, it's our brains. And if we have access to the internet to learn on Coursera or Udora or wherever, and we're able to generate data even just from our mobile phones, and we can find ways to put the tools of finance on it, then we don't need to worry about people collecting our desks if we don't pay on a loan. What we're going to be able to do is collateralize our data. And I think that offers individuals the ability to have a semblance of control in the future. And just shift power a little bit back towards the individual. If we do a good job, a lot back towards the individual and away from large internet platforms. But I don't think the internet platforms are going anywhere. And I think we'll have new gatekeepers show up in the DeFi space. But at least the individuals have a lot more autonomy and control, as well as financial tools.
Thank you, Bruce. Team?
Yeah, absolutely. So our kind of philosophy at Yield, we're creating a licensed fintech, really focus on this DeFi market. So we obviously understand that pure DeFi is people controlling their own keys and understand everything that's happening in DeFi. But our kind of a target market is just the average consumer that they don't know how to control their keys. They may not even understand what that even means, right? But they know how to use an email address and a password. And they know how to reset their password. They don't need to know about GUI. They don't need to know about yams or any sushi swaps. So we're basically kind of handling all of that on the back end, kind of in a managed kind of portfolio. Is kind of what we're doing. Just put money with us, earn yields. It's happening through DeFi. So that's our kind of where we're going after. It's just how do we DeFi will end up putting your credit card down at Yield app, and that's how you DeFi. So understand very clearly that's not really what's really happening, but that's kind of where we're aiming at to bridge, to bring capital into the market and kind of expose more and more people to crypto and to decentralized finance. So that's kind of what we see as like the next big barrier.
Yeah, Bruce, the team, I definitely agree with you. This also kind of this also goes in line with the things that we are working on at Village. It's currently on stealth mode, but then we think that everyday user, an everyday person working on the street, or my grandmother anywhere should actually be able to say, hey, I'm gonna put in my $1, and if it's locked up, it should give me some percentage better than the banks. Right, and it's kind of a good way to kind of start helping people move into this concept of DeFi, right? For people to know that, hey, you don't necessarily have to go buy Bitcoin or buy Ethereum or whatever, right? If I save $1, then the dollar can earn me interest, and that can only happen if the dollar that is being saved is actually used to actually acquire assets or synthetic assets or create synthetic assets that can actually yield interest. So it's kind of a very interesting two-way economy, right? And I think the ability to kind of discover this and then find something that really works well, it's a good way to kind of solve this problem of mass adoption. Krystal, do you want to say something?
Yeah. I guess to end off my spiel within this space. I think for the financial, centralized bank perspective, it's really ripe for disruption right now. There are a lot of fundamental issues. And in particular, as you guys can tell, I'm very passionate, especially around lending to the masses and people and their ability to access credit. And the reason why I'm so passionate and also just trying my best to get as deeply involved in this community is, for one, I already have the background from a historical, just centralized financial institution. I've worked at 3 of the large big banks now, and I've worked in various different functions within the large big banks. So I do have a deep knowledge in terms of, what works well and also what doesn't. And I think that knowledge can be shared and be helpful and stuff for the people who are developing this community as a whole, as lessons that are learned. So that way you don't have to face the same challenges necessarily that the banks have faced or go through the same bumps that they've already gone through, right? It's kind of the wisdom of the grandfather in a way. It's like you can either listen to the grandfather and the wisdom and learn from it, or you can go through these same challenges yourself and have to learn the hard way. And what I want to try to do is help this community not have to learn the hard way just in general, because there is a lot of hype around DeFi, and when there's a lot of hype, there's a lot of money that gets pulled in, and there's a lot of people who are coming into the space to, I think it was Tim's point, that don't even understand, what a key is. And with that, though, comes a lot of different challenges, and also, it becomes ripe for, fraudulent activity or, just, issues that can be mitigated and managed with the right governance, the right auditing, and the right people involved who are really, I would say, looking at it from a 100,000-foot, lens and trying to basically predict these issues ahead of time to try and manage them. So that way the ecosystem can thrive and do exactly what it's supposed to do, which is, make payments and make, value and assets, available to the masses, and also give people back the autonomy to make their own choice.
Thank you, Krystal, and thank you everyone who joined the panel. We can talk about DeFi for 2 years and then nonstop because there are a lot of things to talk about. We hope that Moore's law will be on our side. I mean, looking into even the first time electronic bank payment was made was in 1871 by Western Union. And so it's a long time. It's a long time ago. And so if we look into like how the economy the ecosystem has already developed, then we know that we actually have a lot to look forward to. However, again, that's why we have this community, right? To make sure that actually people can avoid mistakes, right? No one wants to make mistakes, right? But no one wakes up in the morning, hey, today I want to make mistakes. Nobody does that, right? So